Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Julie Coin, president of DriveWealth, a pioneer of fractional investing and embedded finance. She joins me to discuss recently released new data that highlights trends from the third quarter in retail investing from around the world. Julie, it's great to have you with us. Welcome to Trade Talks.
Thank you. It's a pleasure to be here.
Tell us about DriveWealth and the Global Retail Trends Report.
Sure. Well, as you said, DriveWealth is the pioneer in fractional trading. We pioneered it back in 2015, and we're at the forefront of delivering embedded finance. Our mission is to democratize investing globally and empower anyone in the world with a mobile device to control their financial future. We recently published our quarterly Global Retail Trends Report, which highlights global trends in retail investing based on aggregated data from millions of retail investors who trade fractional shares of U.S. equities through our network of over 100 global partners.
What did the data show with increased mobility? Did it impact retail volumes?
Yes, it did. Our data showed that a 35% increase in active mobility coincided with a lower participation in the markets as people began moving again with the rise in COVID-19 vaccination rates. The trading's been down across the board. Both the S&P 500 and Nasdaq were down last quarter, and we saw the worst monthly performance in September since March of 2020. September is historically the worst performing month of the year. Trading volumes were down on our platform, though we did see a mild pickup of 9% in August. Longer term, more and more providers are enabling investors to round up change, get rewards or set it and forget it into favorite stocks or ETF. This will, over time, shape the markets for retail favorite investments as people will continue to passively invest into certain symbols. And you see those dominating our top traded lists. Last quarter, one big Wall Street research house published a report showing that they're seeing the same trend on their platforms and that retail favored symbols are outperforming other names.
What do the demographics show about how frequently certain age groups trade?
Sure. The pandemic caught everyone around the world off guard. People in countries without social safety nets started to panic. They realized that they needed to take control of their financial health and destiny. Last year, we had account openings in the over 40, 50, 60-year-old age groups as people feared losing their life savings to unexpected health catastrophes or long-term unemployment. And as the pandemic's continued, we're now 18 months plus in, we're seeing higher engagement in younger investors. 14% of the accounts that were opened in the third quarter on the DriveWealth platform were driven by investors aged 20 to 49, with the largest absolute number opened by ages 20 to 29. So the younger investors, they're seeing what's happening to their parents and their grandparents financially, and they realize they need to start saving now to get the benefits of compounding and reinvesting to save for retirement and to plan for the unexpected. Once again, in the third quarter, we saw older investors trading larger amounts as they tend to have more money than the younger investors. But the 3Q specifically, we saw 30 to 59-year-olds most actively engaged, with the 30 to 39-year-olds trading 10 times in the quarter.
DriveWealth's quarterly retail trends reports continue to show that retail investors around the globe focus on investing in the brands that they know. As you had mentioned before, what sector took the lead?
Sure. We saw investors hold steady this quarter. In every single region, 7 of the top 10 traded symbols that were there in the second quarter were the same ones as the third quarter. So big tech names continue to dominate: Apple, Amazon, Microsoft, Facebook, Google, as well as the electric vehicle companies Tesla and NIO. We also saw large global brands make the top 10 as usual, Alibaba and Disney to be specific, as well as Virgin Galactic and aerospace company Rocket Labs. Self-directed investors still focused on the newsworthy names, both COVID-19 vaccination plays, Moderna and Novavax, as well as the meme stocks, AMC and GameStop, whereas advisors continue to focus predominantly on low-cost index ETFs and iShares.
Anything else in the report that stands out, and why do you think market participants should be aware of this data?
Sure. Our data revealed that the retail revolution is here to stay. Throughout the pandemic, we've seen consumers increasingly shift to using digital apps to manage their finances. And while most of our partners cater to the underserved or underbanked, even high net worth investors are leveraging embedded finance solutions offered by fintechs just to see the latest in tech and UX. Embedded solutions are engaging. They make it easy for people to invest small amounts. And so while some investors sat on the sidelines this quarter, they were unsure of what to do as the markets reach record highs, we see many investors consistently investing small amounts every week or every paycheck as technology enables people to passively invest microshare amounts via roundups, rewards, and a set it and forget it type functionality. We expect that this passive microshare investing will continue to grow over time as more providers make it easy for investors to penny cost average into the market and provide personalized guidance in-app at the point of transaction via artificial intelligence. And interestingly, while we saw a higher percentage of digital wallets trade year to date, Traditional brokerage account holders were more consistently placing trades every month or every other month. We're monitoring this as we expect this to even out as more retail investors take advantage of passive microshare roundups, rewards, and set it and forget it solutions. Right now, we're actually working on a massive global research study to analyze the behavior of retail investors across the globe. Stay tuned for publication later this year.
All right. Well, we look forward to having you back on to discuss the results, Julie. Thanks so much for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.